Hey there, money mavens and curious investors. Welcome back to the channel. Today, we're diving deep into the world of investment portfolio strategies. Buckle up, because we're about to start a journey that'll help you figure out which strategy might be your perfect financial fit. This is the Finance Virtuoso channel. If you're new here, hit subscribe and the notification bell for the best money tips and tricks. To tell you the truth, there is no perfect strategy. Yep, you heard that right. The perfect investment portfolio is like a unicorn, majestic, sparkly, and completely imaginary. But don't close that YouTube tab just yet. While there might not be a one-size-fits-all solution, there are plenty of solid strategies out there. Today, we're going to break down 9 popular approaches, and by the end of this video, you'll have a better idea of which one might work for you. The One Fund Wonder. Let's kick things off with the simplest strategy of them all, the One Fund approach. This is for all you minimalists out there. We're talking 100% in either an S&P 500 index fund or a total stock market index fund. That's it. One fund to rule them all. It sounds too simple, but I've seen people rock this strategy and end up with portfolios worth millions. It's like the investing equivalent of a capsule wardrobe, simple, effective, and surprisingly versatile. This strategy works great if you're in your wealth accumulation phase, think your 20s, 30s, or even 40s. It's simple, low cost, and gives you exposure to a broad range of companies. But fair warning, as you get closer to retirement, you might want to consider adding a bit more diversity to smooth out those market roller coasters. The dynamic duo, two-fund strategy. Moving on to our next contender, the two-fund strategy. This is like the one-fund approach's slightly more sophisticated cousin. You've got your stock index fund, but now you're adding bonds to the mix. It's like adding some smooth jazz to your rock and roll portfolio. This strategy follows the classic stock-to-bond ratio that many finance pros swear by. As you get older, you increase your bond allocation to help smooth out those wild stock market swings. It's simple, it's effective, and it's even got the Warren Buffett seal of approval. The Oracle of Omaha himself has set this up in his will for his wife's trust, 90% in a low-cost S&P 500 index fund and 10% in short-term government bonds. The three-fund portfolio, the Bogleheads' favorite. Alright, now we're cooking with gas. The three-fund portfolio is like the holy trinity of index fund investing. You've got your US stocks, your bonds, and now you're adding some international flair with an international stock index fund. This strategy is super popular among the Bogleheads, those savvy investors who follow the gospel of Jack Bogle, the founder of Vanguard. It's simple enough to manage but gives you a nice spread of diversification. Do you really need international stocks? Some say US companies already have enough international exposure, others swear by global diversification. My take? A little international spice never hurts anyone, but don't go overboard. The 3-Fund Plus 1 Real Estate Edition. Next up, we've got the 3-Fund Plus 1 strategy. It's exactly what it sounds like. Take the 3-fund portfolio and add a REIT, Real Estate Investment Trust, fund to the mix. REITs are like mutual funds for real estate. They let you dip your toes into the property market without having to deal with tenants who decide their pet llama doesn't count under the no pets policy. This strategy gives you a nice extra layer of diversification. But remember, just because you watched all seasons of Fixer Upper doesn't mean you need to go all in on real estate. Dave Ramsey's 4-fund strategy. Now, let's talk about Dave Ramsey's strategy. If you're into personal finance, you've probably heard of Dave. He's like the tough-love dad of the money world. His strategy involves equal parts of 4 different types of funds: growth, aggressive growth, growth and income, and international. While I love Dave's advice on getting out of debt, his investment strategy makes me scratch my head a bit. He's okay with paying commissions on actively managed funds, which is a bit like voluntarily paying extra for your groceries. But hey, if you're a Dave devotee, this strategy could work. Just stick to low-cost index funds instead of the pricey actively managed ones. The no-brainer portfolio. Next up, we've got Bill Bernstein's no-brainer portfolio. And let me tell you, this guy is no slouch. He's got a PhD in chemistry, he's a neurologist, and he writes books on finance. Talk about an overachiever. His no-brainer portfolio is an equal split between bonds, European stocks, US small-cap stocks, and the S&P 500. It's simple enough to implement but based on some serious academic research. If you like your investment strategy with a side of brainpower, this could be your jam. The Ivy League endowment strategy. Ever wondered how those fancy Ivy League schools manage their billions? Well, wonder no more. The Ivy League endowment strategy tries to mimic what the big boys like Harvard and Yale do with their endowment funds. Now, I've got to warn you, unless you've got a spare billion lying around, you won't be able to replicate this exactly. These schools invest in things like private equity that us mere mortals can't access. But we can get pretty close with a mix of US stocks, bonds, international stocks, commodities, and real estate. Fair warning though, that commodities funds can be a bit tricky to get into. It's like the VIP section of the investment club, high minimum investment and a bit pricey to boot. The Coffeehouse Portfolio. No, this strategy doesn't involve investing all your money in overpriced lattes. The Coffeehouse Portfolio, created by financial advisor Bill Schultheis, is like the Swiss Army knife of portfolios. It's got a bit of everything: S&P 500, value stocks, small-cap stocks, REITs, international stocks, and a hefty dose of bonds. It's diversified, sure, but with 7 different funds, it might be a bit of a headache come rebalancing time. It's like trying to keep 7 different plates spinning at once, doable, but you might want to pop an aspirin first. The ultimate buy and hold portfolio. And now, for the grand finale, the ultimate buy and hold portfolio. This includes a whopping 11 different funds. Yes, you heard that right, 11. It's the brainchild of Paul Merriman, and it's designed to capture pretty much every equity asset class out there. Now, I've got to be honest, managing this portfolio might be more complex than solving a Rubik's Cube blindfolded. But if you're the type who likes to have all your bases covered, and then some, this could be your holy grail. Alright, we've covered a lot of ground, haven't we? So, take some time to think about what you want from your investments. Are you all about simplicity? Maybe the 1 fund or 2 fund approach is for you. Want a bit more diversification? The 3 fund portfolio might be your sweet spot. Feel like you need to cover all your bases? One of the more complex strategies could be worth a look. Remember, the most important thing isn't which strategy you choose, it's that you choose one and stick with it. Constantly changing your approach based on the latest hot tip or market swing is like changing lanes in rush hour traffic. You might feel like you're doing something, but you're probably just slowing yourself down. So, there you have it, folks. 9 different approaches to building your investment portfolio. Which one speaks to you? Let me know in the comments below. And hey, if you found this video helpful, don't forget to like, subscribe, and hit that notification bell. Your portfolio will thank you. Until next time, happy investing.